Hello, and welcome to March 23. Alphas have a new leader at KR at 37%. There it is. KR has jumped over IBT. IBT fell down. T fell down, and we are not looking good as this sell-off has now routed my calls. And I mentioned this a while back that I was not too happy that I had too many calls and not enough puts on the balance sheet. But I had to go with the scanner, and the alpha account is limited in the amount of purchases at the time we entered, so it's just a matter of writing it out. We are about $300 behind, so let's go do the numbers on that. $300 behind the actual numbers. Let's do the actual numbers. Yeah. So we started off with 533 as a start for the beginning of the year, and during this sell-off, we are now down to $306. Divide that by the 533, which is the benchmark to start as a percentage, and the results are we are 5.5% down for this account. Okay, it happens. Been down before. You get back up and keep on going. The nice thing is that KR is holding to its true fashion. We did say that it had an ATR of 95, and there it is, getting very close to that third ratio. And we close above that third ratio in the next 1 or 2 days. Then we'll be able to move the stop here to the lower low, unless we can hit KR 100% ATR and get out of Dodge. Going on now to ITB. ITB is running here, and it did close above its first ratio, and we do have some kind of a buffer here to the one loss. It could be said that we could put the stop here at the entry line, and then take a loss. Now this is down. This is 16. This is representing 16% gain, so we would lose all the 16% gain plus the times K plus the AB spread. But this is the 3-to-1 ratio, and we are sticking with it. We do not change. We do not change the trading strategy in the middle of the month. We can do it on the Elvis shift, and at the Elvis shift we'll be looking at. And whereas already in the laboratory is already in discussion about what Elvis what Elvis shift we might be looking at on April 1st. Okay, going on to T for AT&T, and as I mentioned, AT&T does own Warner Brothers. The theaters are finally opening up, so they're finally going to get their content out into the masses. And then after that, they'll be able to get their content onto their HBO Max. A lot of discussion here in Los Angeles that we're getting into production. It's going to be a little bit lengthy, still a long tail to get done, because of the fact is that we do have a lot of restrictions going on here with COVID here in LA County. So the result is that it's going to be a slower pace than the rest of the country. But that does not stop Warner Brothers from shooting in Texas, which is wide open, Georgia, who had to have a substantial base in Georgia. London, England is a little bit more restricted because they're still going through some of their situations of up and downs with the COVID. And then there's other parts of the world where you can shoot on remote locations as long as there is some safety protocols according to the local laws. So AT&T might be in position of maybe able to get back on their footing with their media empire. That takes us now to the final positive, and that's Adobe. Adobe here is running. It's building up. Let me go ahead and do a master chart there so I can see a little bit better. Okay, so what do we got? We got a call there. We got our exit rules right there. Adobe is where I wrote the exit rules. This is our data here for Adobe. We are slowly ever moving up to that third ratio, but we have a nice upsweep. We have a nice 45-degree angle, which is really what you want. You don't, maybe it's nice to have a skyrocket that goes boom, but that skyrocket better hit ROI 100 or cross that 30 RSI ASAP, because when stocks have a quick up, they also have a quick down. Stocks with nice and steady 45-degree angles tend to be very much rock solid. Okay, and that is the end of the positives. We are not all doing all that good. T minus is a real disappointment, and that's because part of the problem there at T minus is we had a tremendously bad fill, and we're not paying the price on that, but we're still stuck with the rules in doing that. Our penny stock positions have all gone negative. There's nothing there to talk about. We're waiting for their exits and see what's going to happen. And we do have a contingency plan in the event of loss. Right now, we're looking at an $18 loss on REI, and we're only looking at $22.29 on Sundial. So with that, we'll conclude today's report for Losers Become Winner with KR at 37%. I thank you very much for stopping by and checking it out.